the last couple of weeks. We've got, the market goes up 2% one day, down 2% the other day, up 2%. And whenever I see volatility around the highs in the stock market, I've seen this two times in the past. Once in 2007 at the top of the housing bubble, July of 2007, things started to get volatile around the highs. And from January to March of 2000 at the top of the dot-com bubble, we saw similar price action. I've talked to some of my subscribers about this who are older, and they're like, yeah, I've seen this before. Technically, it's kind of a bad sign. I am expecting a correction. I don't know how big it's going to be. Maybe the correction is already over. Stocks were up a lot today after the debt ceiling was resolved. So maybe we corrected about 5% and that's going to be it. I'm not really sure.
Got it.
But I do think it's going to go lower in the future.
Oh, how much lower do you think?
I mean, it's not a matter of the stock market specifically. It's about the dispersion within the stock market, and some sectors will do better than other sectors. Tech is really overvalued. It's we had a bad day for tech a couple of days ago. All the big tech names were down 5%. Facebook was down 5%. Semiconductors, the chart of semiconductors is one of the ugliest charts I've seen in the world. A lot of these tech charts look very tired. They're getting close to the 200-day moving average. So I think that's a beginning of a trend lower for tech.
Oh, okay. So I'm guessing you're shorting QQQ?
No, I'm not. I am shorting some stuff though.
Got it. Okay. What's your view on hyperinflation or deflation? Where do you think we're heading towards?
Well, I think ultimately inflation is going to go a lot higher. The Fed's response to this has been basically nothing. And if you look at what's going on with the Fed is sort of in crisis right now. You had the trading scandal with Eric Rosengren and Robert Kaplan and Richard Clarida, these Fed governors that were trading in their personal accounts while they were making decisions on interest rates. And, DC is getting very involved in the replacements for these Fed presidents. They're going to be replaced by people who are even more dovish. I think you could have, in a couple of years, I think you could have 10% inflation, maybe sooner.
Wow.
Maybe higher than that. I think inflation goes a lot higher. And I think we've reached the point with stocks, in the beginning when inflation was going up, but it wasn't very high. It was about 3 or 4%. That was beneficial for equities. And now that it's getting, CPI is 5.5%, PPI is 8.3%. Now that it's getting much higher, it's a problem for stocks. And we're kind of going back to the 1970s.
Okay. That's a long time ago. I guess most people haven't really experienced that, especially millennials, right? So how, as an investor, how would you adjust your portfolio or prepare for that kind of situation?
Well, in the 1970s, financial assets did poorly, but real assets did very well. So stocks and bonds were both bad in the 1970s. Stocks valuations compressed a lot. They got to very low valuations in 1982. Interest rates were 14% on bonds. If you were in financial assets, it was a disaster. But in the 1970s, real assets like commodities exploded higher. Okay. And I think we're going to have a similar sort of environment over time. So if you have a portfolio and you're developing an asset allocation, a lot of people have 60% stocks, 40% bonds. You need to include some commodities in that asset allocation. You need to get exposure to commodities.
Got it. You're referring to, I'm guessing, gold, silver. Which ones would you like?
All commodities, energy,
Mhm.
metals, agriculture, soft commodities, really everything is going to be going higher. Yeah.
Got it. So I'm guessing you're buying the futures, right, of these
Well,
commodities.
you could do that, but there's ETFs or
Mm.
ETNs that allow you to buy a big basket of commodities. So one of them, the ticker is DJP, which is the Dow
Mm.
Jones AIG index, and you're basically it's an ETF that's all commodities. And if you look at a chart of that over the last year, it's up about 50%.
Oh, got it. That is already up so much. Do you still see it like going a lot higher or?
Yeah, I do. Yeah.
Yeah, got it. Okay. Thank you for sharing that ticker symbol. And that's really sad to hear because most people are probably on investing most of their money on stock markets, especially the tech industry. In regards to Fed, what do you foresee the Fed will do, when that happens, or what they will do with the interest rates or the monetary policy?
I don't think the Fed is going to do anything until there is political pressure for them to do something, until there is political pressure for them to act, which basically means that, we're coming up to a midterm election in 2022. There's going to be some polls. And if the polls say that inflation is a big concern for voters, and if voters believe that, the Democratic administration is responsible for inflation, which I think they do, then probably they're going to get worried about inflation. And I think the Fed will be forced to take action, but not until then. There has to be political pressure.
Hmm. Yeah, because the consequences of them increasing interest rates is really it's huge, right?
Yeah. Yeah.
Got it. So what are your thoughts on oil and supply chain issues, and what do you think is causing the supply crunch?
Um, I don't know. I don't know the answer to that question. I mean, it's a couple of things. Demand has shot up a lot since the pandemic because, people got stimulus checks and PPP loans and unemployment benefits. We flooded the system with liquidity. So demand has gone up a lot. Prices are rising. They have not risen enough. This is why I think there's going to be more inflation. Ultimately, if there's going to be a resolution to the supply chain crisis, it has to be a supply side solution. I do not see it getting better anytime soon.
Why is that? What if people go back to work, and there will be more manpower, to help with the transportation or?
Yeah, I mean, part of this is the chronic labor shortages, but one of the things we're seeing with the labor shortages is, wages have gone up a lot. In fact, this whole debate about the $15 an hour minimum wage is just like irrelevant at this point because there really aren't any jobs that pay less than $15 an hour anymore. So people are getting paid a lot more money, but still, it hasn't been enough to incentivize people to go back to work. And I don't think there really is a number that will incentivize people to go back to work. So I think the labor shortages are going to persist for a while.
Oh, wow. Okay. Unless maybe Elon Musk like launch the robots, right? Then then these robots will be able to work 24/7.
Yeah.
They're working on that.
Yep.
Got it. Any thoughts on real estate, both commercial and residential, and where do you see it going in the future?
I think residential real estate is going to be hot for a while. One thing that happened is after the financial crisis, building activity went down a lot. And now we're sort of behind in terms of there's just not enough homes available It's a supply demand imbalance, and it's going to take a while for the home builders to build enough to alleviate that supply problem. Interest rates are, they've been going up the last couple of weeks. I think they have to go up a lot more in order to make a dent in demand for homes. I think 10-year interest rates that are about 1.6%. I mean, they could easily get to 2%, and I still don't think that makes a difference in home prices.
How is the housing market in your area?
It's very hot. It's very hot.
Still,
Yeah.
Okay, got it. How about commercial real estate?
I don't really have any insight into that.
Oh, okay, got it. I guess the last thing that we can talk about is, what is your thoughts on cryptocurrency?
Yeah.
Mhm.
Bitcoin has gone from, let's see, it's at 54,000 right now. Is not long ago, it was 40,000. It's went up a lot. I think one of the reasons that happened is because of this idea that the IRS is going to track $600 transactions and above in people's bank accounts. This is what the Bitcoin guys have been warning about for years, is this, loss of privacy and banking freedom. And I think that creates a big demand for Bitcoin. I think that's partially responsible for what's happened in the last couple of weeks. I don't currently own Bitcoin. I kind of wish I did. I owned it from 2019 to January of this year. I've been waiting for an opportunity to get back involved, and I just haven't found an opportunity.
What would trigger you to get in again?
Well, I was hoping the price would go a lot lower, back below 20,000, but it didn't. And, so now I'm stuck.
I'm in the same position. I'm actually waiting for it. Yeah, I know it will eventually get there. Just patience. Yeah. All right. In regards to China or Evergrande, you said on one of the videos that I watched on Real Vision, you said that the next crisis will come from China. Why is that so?
Well, what's happened in China is that, China's history with capitalism is pretty short. It's only about 30 years. And things have worked out pretty well until now. But China's version of capitalism is different from ours. They have state-directed investment. It's not really free market forces that are determining, what gets built or not. So what happened with Evergrande is that you have these real estate companies that have a lot of unproductive assets. And if you remember in 2011, people were talking about the ghost cities in China, and China had these, in a centrally planned fashion, they built these cities and they were moving people into them, but that's not an efficient way to allocate resources. So what you've had is years of malinvestment. And, just for Evergrande, there's going to be a lot of Evergrandes. There's going to be a lot more failures in China. I think in terms of emerging markets, I think China underperforms for years. So, yeah.
So you said that there's going to be a lot more Evergrande. Will that will cause will that cause a contagion effect, to the global markets?
I don't think it necessarily causes a contagion. It's harder to have a contagion in a country that's not capitalist, because ultimately, China can nationalize under Evergrande. They can pay off the bondholders. They can sort of paper over this problem. In contrast to the United States, when Lehman Brothers failed, there were reverberations throughout the economy that doesn't necessarily exist in China. So there was a lot of people that are saying, well, there's going to be this contagion from Evergrande. I was one of the people saying that there's not, and I don't think there will be. But I do think that, if you're investing in emerging markets, what I would do is I would avoid China, because you're gonna have more problems like this in the future.
Oh, so So you're saying that it will affect the Chinese tech giants, right?
Yeah.
Oh, okay. And on how long, what time frame do you think it will start?
I mean, over the course of many years, in the 5 to 10 years. Yeah.
Oh, okay. So you're saying to avoid Chinese stocks,
Yeah.
basically in the next 5 to 10 years.
Yeah.
Got it. So in the next 5 to 10 years, you're basically saying to put most of the portfolio in the commodity stocks, right? And maybe like stock, like some stocks that are more stable, maybe like something like AT&T or like utility stocks.
Well, I don't know about, I mean, it's always good to have income. It's always good to have dividends. I don't really have an opinion on the telecoms or utilities. But the one point I'll make about the commodities is that, you don't need to have a portfolio that's all commodities. Like you can, subtle changes in a portfolio can make a big difference. So if you go from a portfolio that's 60% stocks and 40% bonds, and then you have a portfolio that's 50% stocks, 30% bonds, and 20% commodities, like that makes a big difference. It's not necessary to have a portfolio that's all commodities.
Got it. So you will buy some bonds as well.
Yeah.
30-year bonds or?
Well, that's a much longer discussion.
Got it. I'm thinking probably more stable ones, right?
Yeah.
Okay. Any final thoughts on, that you want to tell everybody or the audience?
I think that, the environment that we had in 2020 was pretty easy. That was a very easy trading environment, and it's going to get a lot more challenging. A lot of the really obvious trades have already played out. So I don't really know what the next theme is going to be. I'm trying to figure it out, but it is going to be tougher.
Okay. All right. So how can people reach you? And you want to share more about what you're working on? Maybe like your the Daily Dirtnap or the books that you're working on?
Yeah, the Daily Dirtnap is my newsletter. You can go to dailydirtnap.com. You can also follow me on Twitter at Daily Dirtnap. I am working on a book, but it's too early to talk about. It's still in early stages.
Okay. I'm guessing it's about macro.
Oh, no, it's something totally different. Yeah.
Oh, looking forward to it. Probably in the next 2-3 years. We'll be out.
Yeah. Okay.
All right. Yeah, for everybody who's interested in, checking out his newsletter, go to Daily Dirtnap, and I'm sure it'll bring a lot of value to any investors out there.
Great.
Thank you so much for your time, Jared.
Thank you.
Have a great day.